Unveil the hidden puppeteers. Discover who holds the strings to your wealth in the enigmatic world of finance. Ladies and gentlemen, welcome to our in-depth exploration of a topic that affects each and every one of us, yet often remains shrouded in mystery. Who controls all of our money? In a world where our lives seem intertwined with the pursuit of wealth and prosperity, it's essential to understand the origins, the secrets, and the implications of the financial system that governs our existence. So without further ado, let's begin. The birth of central banking. Our journey takes us back in time to the year 1694, a pivotal moment in the history of finance. England, war-weary and in desperate need of funds, embraced a groundbreaking solution. Scottish banker William Paterson proposed the creation of a privately owned bank with the power to conjure money out of thin air. This laid the foundation for the world's very first central banking system, an entity that wields more influence than laws, governments, or politicians. Strangely, the concept of central banking remains hidden from the public eye. The birth of the Federal Reserve. Fast forward to the early 20th century, and we find ourselves in the United States. In December 1910, Senator Nelson Aldrich and 6 others embarked on a clandestine mission to Jekyll Island, off the coast of Georgia. What unfolded over those 9 days would birth the Federal Reserve System, a move that would alter the course of American finance forever. A clandestine operation, as Frank Vanderlip, president of the National City Bank of New York, later admitted, aimed at avoiding public scrutiny. The deceptive transformation. The 6 men who crafted the Federal Reserve Act included banking magnates, government officials, and some of the world's wealthiest individuals. Astonishingly, these men represented a quarter of the world's wealth in 1910. They promised to stabilize the economy and curb the influence of Wall Street. The catch? They were the same individuals they claimed to rein in. This secretive process, cloaked in deception, allowed a select few to create money from nothing and loan it to the American government with interest, all hidden from public view. The birth of fiat currency. In 1971, President Nixon announced a monumental decision that would forever change the world's financial landscape. The United States would no longer convert its dollars to gold at a fixed rate, severing the direct link between paper currency and a tangible asset. The result? The birth of fiat currency, where money's value derives from trust in the government that issues it. It's a system where the government essentially declares, "Let it be money," and the populace trusts in this declaration. Fiat currencies, including the US dollar, have become the foundation of our modern monetary system. Yet, the impact of this shift reaches far beyond the absence of a gold standard. The mechanics of money creation. Our journey into the heart of the financial system brings us to the mechanics of money creation. Here's where central banks, such as the Federal Reserve, wield their unparalleled power. When the government requires funds beyond tax revenues, they turn to the Treasury Department. In a fascinating process, the Treasury issues an IOU, or bond, to the government. This IOU, now a representation of debt, finds its way to the Federal Reserve. At this juncture, the Fed essentially writes a check, creating new money, despite no existing deposit backing this action. The words of the Boston Federal Reserve make this process abundantly clear. When the Federal Reserve writes a check, it is creating money. In stark contrast to the rules that govern ordinary citizens, central banks possess the extraordinary ability to create money at will. This unique privilege enables them to influence and manipulate the monetary supply, with far-reaching consequences for the wider economy. The role of commercial banks. Our financial system's intricate web extends to commercial banks, which play a pivotal role in the money creation process. Whenever you seek a loan to buy a house, a car, or any other asset, banks embark on a remarkable feat. They create money out of thin air, lending you the capital you need while ensuring they collect interest on the loan. In the words of Graham Towers, former governor of the Central Bank of Canada, each and every time a bank makes a loan, new credit is created, new deposits, brand new money. Even Paul Tucker, deputy governor of the Bank of England, attests that banks extend credit by simply increasing the borrowing customer's current account. In essence, Banks create fresh money by merely typing digits into a computer, resulting in a system where roughly 97% of all money is digitally created. Only a meager 3% exists in the form of physical cash and coins, the tangible representation of our financial system. Debt as money. This profound transformation of debt into money lies at the heart of our financial system. When you acquire a loan from a bank, it is not an extraction from someone else's savings. Instead, it represents the creation of entirely new money, and the resulting debt embodies that money. As Nobel Prize-winning economist Milton Friedman once remarked, "Whoever controls the volume of money in any country is absolute master of all industry and commerce." Debt, within this system, is not only an obligation to repay, but also a form of currency. It may sound complex, but the key takeaway is that every time a bank extends a loan, it generates new money. To the lender, this newfound money is an asset, while for the borrower, it constitutes a liability. Nonetheless, both perspectives are intertwined and interconnected in our monetary system. The role of private central banks. Our investigation leads us to an intriguing aspect of money creation. A substantial portion of money is generated by the private banking sector, a process that few are aware of. In most developed economies, around 97% of money is digitally created by banks, making most of the world's money supply privatized. This raises questions about the balance of power and transparency in our financial system. Money, control, and revolutions. Throughout history, money has played a pivotal role in sparking revolutions and conflicts. Past leaders and scholars have recognized the influence of central banks and financial systems on the course of nations. In 1881, President James Garfield stated that control over money equates to control over industry and commerce. Our history is replete with instances where economic turmoil has led to political upheaval. The path forward. As we conclude, we find hope in the growing global movement of individuals who are reevaluating their relationship with the debt-based economic system. Some are turning to alternative assets like gold, silver, and cryptocurrencies like Bitcoin as a way to regain control over their financial future. The journey doesn't end here. It's the beginning of a deeper understanding of who controls our money and how we can shape a more equitable financial system. It is clear that our financial system is a complex tapestry of power, control, and secrecy. Understanding the mechanisms that shape our money is not just a matter of curiosity, it's essential for responsible citizenship in today's world. We encourage you to stay informed, continue asking questions, and seek financial literacy. If you found this video informative, then don't forget to hit that like button and subscribe to our channel for more thought-provoking content on topics that impact our lives. Thanks for watching, and we will see you in our next video.